What's going on, everyone? Body here. Another episode of the Daily Price Action Show.
And I'm Ray. Welcome back to Couples Trading Lab.
SPY pushed into fresh all-time highs again today, and at this point, this market really still isn't giving sellers much to work with. Every time we get even a small pullback intraday, buyers continue stepping right back in with strong strength and reclaiming with very strong bullish momentum.
Yeah, and that's really been the story these last couple weeks. A lot of traders keep expecting some larger pullback to finally happen, but the market just continues absorbing weakness very quickly and grinding higher overall.
And when you zoom out and actually look at the daily chart here, bulls still clearly remain in control overall. We continue making higher highs, price remains above the daily 20 EMA line, momentum still looks very strong. There's really no major technical damage on this chart at the moment.
Exactly. And I think that's what's making this environment difficult for a lot of traders mentally. Because on one side, people can clearly see the market looks extended short term after such a strong move higher. But at the same time, sellers still haven't shown much real confirmation yet.
Right, and that's the important part. Just because a market becomes extended doesn't automatically mean it's ready to completely reverse and go down. Strong momentum trends can continue pushing higher much longer than most people expect.
And honestly, when you look at these recent candles, this almost feels like momentum acceleration now. Pullbacks continue becoming smaller, buyers continue stepping in very aggressively, and sellers really haven't been able to maintain downside pressure for very long at all.
Yeah, and eventually markets like this become emotionally difficult for traders because people stop thinking about structure and proper entries and instead begin feeling pressure to chase momentum because they're afraid price keeps moving higher without them. And this forces traders to take emotional trades and not wait for proper planned entries in fear of missing out.
Exactly, especially after multiple expansion candles already happened. At that point, the market can still continue higher, but risk to reward for new entries becomes much more difficult.
And another thing standing out to me right now is how far price has separated away from the daily 20 EMA line as we can see from this chart. Eventually, markets usually reconnect back towards short-term moving averages at some point. Now that doesn't mean the market suddenly crashes tomorrow or anything dramatic like that. The difficult part is trying to predict the exact timing before sellers actually begin showing meaningful confirmation.
Because right now, sellers still really haven't shown much technical control yet. If bears were truly starting to regain momentum, you'd probably want to begin seeing things like failed breakout attempts, larger rejection candles, bearish engulfing candles, or momentum beginning to weaken near highs. And honestly, we just haven't seen much of that yet.
And another thing worth paying attention to here is RSI continuing to stay elevated on the daily time frame. Historically, during strong momentum phases, RSI can absolutely stay elevated for extended periods of time.
Exactly. But elevated RSI also tells traders to stay disciplined emotionally. Because once momentum becomes too crowded in one direction, reactions can happen very quickly once the market finally begins cooling off. And usually, by the time traders become the most comfortable chasing price, that's when volatility can suddenly return very fast. Now, one chart I'm paying very close attention to right now is VIX. VIX did pull back today while SPY continued rallying higher, which makes sense overall with equities continuing into fresh highs. But even with that pullback, volatility still hasn't completely collapsed underneath the surface.
Exactly. During aggressive melt-up rallies, you'd expect VIX to completely break down beneath the 200 simple moving average line in green color that you see on the chart as fear disappears from the market. And we're just not seeing that. As we can see from this chart, price is trading very closely to the 200 simple moving average line, and we are not seeing a downwarding slope on the 200 simple moving average line, indicating that price is in a downtrend. Usually, what you would like to see is the 20 EMA line trading below the 200 simple moving average line, showing that the market is bearish and momentum of the trend is bearish, with the 20 EMA line acting as an entry point for expansion downside to contraction back up, testing the 20 EMA line and then expanding lower to make new lows. But instead, VIX is stabilizing around the $17 to $18 region while SPY continues printing fresh all-time highs.
Yeah, and I think that's important because it shows traders still aren't fully comfortable underneath the surface despite how strong equities continue looking overall.
Right, and that doesn't automatically mean some major sell-off is about to happen. But it does tell me there's still underlying caution in this market despite the strong upside momentum. And divergences like that are definitely worth paying attention to heading into the upcoming week. We are at such levels where the market is very fragile, and we should pay attention to the headlines that are coming out. What President Trump's visit to China says about the market, how it affects the market going forward, what are the implications on the Iran war, how the Iran war is affecting oil prices, and its impacts on inflation. These headlines are going to be very important heading into the upcoming weeks as we get higher CPI data prints from the cause and effects of the Iran war. With markets at these elevated levels and VIX refusing to break down, it's very crucial that you do pay attention to those headlines and you are ready for any sentiment change in the upcoming weeks.
So overall, bulls still clearly remain in control right now. The trend still looks strong, momentum still looks strong, and buyers continue defending weakness aggressively.
Exactly. But this is also where traders need to understand the difference between a strong market and a low risk entry, because those things are not always the same. And sometimes the hardest thing to do during strong momentum phases, especially late stages, is simply staying patient and waiting for better structure instead of forcing emotional trades.
So heading into tomorrow, what's the main thing you're watching?
Personally, mainly whether buyers can continue maintaining momentum near these highs without finally allowing sellers to gain traction, because eventually markets do cool off at some point. But until sellers actually begin showing meaningful confirmation on the daily time frame, bulls still remain in control overall.
Still a very strong market overall right now.
Absolutely. If you guys enjoyed the breakdown, make sure to subscribe to Couples Trading Lab for daily price action analysis, educational uploads every Saturday, and our weekly watch list every Sunday.
And let us know down below. Do you think SPY continues grinding higher from here? Or are you waiting for a larger pullback before becoming aggressive? We'll
We'll
see
see
you
you
guys
guys
in
in
tomorrow's
tomorrow's
breakdown.
breakdown. If you enjoyed this video, please give it a thumbs up. Leave a comment down below. We really enjoy reading your comments. And not only us, but others also enjoy reading your comments to feel what sentiment is like in the market, what everyone is thinking, and most importantly, it helps push us towards other viewers as well, recommends us to other viewers, and that greatly helps our channel. Thank you so much for watching this video. We'll see you in tomorrow's Daily Price Action Show.